Market Journal, Television for Agricultural Business Decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Partial funding provided by the Nebraska Soybean Board.
Hello everyone, I'm Bryce Tuskett, and I'd like to thank you for joining us today on Market Journal. Well, just in time for the Thanksgiving holiday, the fall harvest here in Nebraska is all but complete. The U.S. Department of Agriculture estimated this week that soybean harvest had wrapped up and less than 5% of the corn crop remained to be harvested statewide. As we kick off this week's show, 2 Nebraska meat processors are among the first to receive grants to help expand their capacity for independent plants. Greater Omaha Packing Company received nearly $20 million from the U.S. Department of Agriculture. That money will go toward an investment to expand the facility to ultimately increase their capacity by 30%. When all is said and done, the Greater Omaha team estimates that their plant expansion will give the facility the ability to process an additional 700 head of cattle per day. USDA Secretary Tom Vilsack recently traveled to Omaha to announce the investment into the projects for the first round of the meat and poultry processing expansion program.
Today, we begin the process, and I stress begin the process of announcing a number of awards.
Vilsack says the Biden administration is committed to expanding meat and poultry processing capacity, which he says in turn will increase competition, support producer income, and strengthen the food supply chain, all while creating jobs and economic opportunities in rural areas.
What we're doing is we're essentially creating resources to expand market capacity. The 21 grants being announced today will result in processing more than 500,000 additional head each year. Now, that means more opportunity for cattle producers in this country, for pork producers, for poultry producers. About 34 million increased capacity for the poultry industry. So roughly 500,000 for beef and pork and other meats. Poultry about 33 million additional capacity.
Vilsack made that announcement while standing outside Greater Omaha Packing Company. In Nebraska, the administration is investing $20.6 million in 2 grant projects.
Almost $20 million being provided to Greater Omaha. One of 21 grants in 19 states, $73 million in total, going to all over the country, from Washington to Vermont, from Louisiana to North Dakota, and everything in between.
At Greater Omaha, company officials say they'll be increasing their processing capacity by 30%. Company President Mike Drury details that project.
Parts of that are going to be some further automation, some wastewater management for the city, as well as one of the biggest things we're hearing from our customers is responses for additional value add, making further products into retail ready and customer friendly use. So combined with that, the investment from the USDA will be a big component to allow us to remain competitive to do that.
The plant in South Omaha currently slaughters 2,400 head daily, with most of the cattle raised by producers in Nebraska and western Iowa. The expansion will take place over the next 3 to 4 years. Also happening this month, a renewable diesel processing facility broke ground in the state. 2 well-known companies are partnering to build this facility near Hastings. The Loves family of companies and Cargill joined forces to create Hartwell Renewables. Hans Kabat is president of Cargill's North America protein business.
Renewable diesel is diesel that can be produced from renewable inputs like beef tallow or other grains and seed oils like soybean oil.
The companies anticipate this project will be completed by the summer of 2024, but it's been in the works for quite some time now between Cargill and Loves.
We are 50-50, and we've been working together as partners on this over the last really 4 years to get to this point. And Loves is taking the diesel that we are producing, and Cargill is helping to build the facility, will run the facility, and we are supplying much of the feedstock from the facility. So My role here is I lead our protein business, and the beef tallow that will supply the plant is coming from our 3 to 4 facilities.
The new Hastings facility is expected to create 50 new jobs and is projected to produce 80 million gallons of biodiesel each year. Now, once that fuel is produced, Musket, which is a division of Love's family of companies, will transport and market that fuel across the United States. This will make that new facility a first of its kind to both manufacture and distribute this fuel from the plant to the pump. Up next is a new segment to share with you today. It's one we call Crop Talk. This segment will be focused on bringing row crop producers the most up-to-date research and data available. We plan to visit with extension and industry experts to share information with you that will ultimately help improve your yield and profitability. In our inaugural Crop Talk segment, we welcome Nebraska Extension plant pathologist Tamra Jackson-Ziems to discuss how seed selection could help you avoid some pesky pathogens in your cornfields. On today's Crop Talk, we are talking with Nebraska Extension plant pathologist Tamra Jackson-Ziems. Tamra, thanks for coming in.
Well, thanks for having me.
Today we're going to talk about seed selection, particularly as it relates to tar spot. So give us an update on where tar spot is in the state of Nebraska.
Well, just so everyone knows, tar spot did move into Nebraska, probably out of Iowa and from the east in general. And so we've confirmed it now in 31 counties in extreme eastern Nebraska, and also a little bit of movement into northern Kansas and in South Dakota as well. And so it could be further spread than that, but it's at very, very low incidence and severity in most of those locations. But we'll continue to monitor that and update the map.
What kind of field does tar spot like to locate within?
You know, as we've watched this pathogen move across the Midwest, it's about moving that fungus across, and the fungus likes wet conditions like most of them do. It's very favored by cooler conditions like temperatures in the 60s and 70s, and so that's why we'll see it flare up at the end of the season, usually when our cool night temperatures are more supportive. But where we really saw it become the most severe this year were in those pivot irrigated fields. And it's just now getting into the part of the state where we have more irrigation, so we expect to see more of that. And I want to make sure everyone's aware of it.
Obviously there's a visible sign to it, but have you been able to track yield loss associated with tar spot?
You know, in Nebraska, not really yet. And I would bet the vast majority of fields did not see any yield loss. There were some in Saunders County and a few others, where it was severe enough that we might have seen some yield loss. In states east of us, where it's been there longer and it's built up to more severe levels, they've documented in the worst case scenario up to 50% yield loss. And so we know the potential is there for it to be severe and cause a big impact. Fortunately, most of the time that's not going to be the case, but it really is going to rely on the conditions.
Yeah. Well, we wanted to have you in today, Tamra, to talk about seed selection, because there is some work that producers can do here as they're looking at next year and making some considerations. What can they be thinking about and looking at?
Well, this is a good time of year to start thinking about managing all of our diseases, and this is one you might not have thought about yet because it is pretty new to us. And so there is the chance that you can select hybrids that would be more resistant or more tolerant of the disease tar spot. And anything you can do to reduce the amount of disease is going to reduce impact on yield or potentially even the need for a fungicide later on. And so if you can work with your seed company, agronomist, and talk to them about concerns you may have about tar spot, especially if it was in your field or county near you in the past year or two. I think it would be worth your time to do that, particularly if it's in irrigated fields. And so seed catalogs may not always have ratings for this disease. It's new enough and it's really hard to work with. And so they have to screen in locations where they've got the disease. We can't just inoculate and get it. So just something to keep in mind and have those conversations to be prepared.
Are there particular resources that are out there for a producer to utilize? And of course, we always like to promote talking to your local Nebraska Extension office helps on that front too, right?
Absolutely. Reach out if you think you have tar spot, if you start seeing those black dots on those leaves. And so that's important for us to make sure we know where the disease is. We do have resources on the Crop Protection Network and on Crop Watch to help people recognize the disease. And we do have fungicide efficacy data. The good news is fungicides do work, but it really matters which products you're using and when they go on relative to when disease develops. We know the products that have mixed modes of action, like the three-way products, have done the best job in our multi-state evaluations of that. Otherwise, though, I'd rely back on the seed company to look at their data for each of the hybrids.
Thanks to Tamra for her time, for joining us this week on that news segment. Now, coming up, we'll have more with Tamra on crop disease mitigation and prevention in the coming weeks, as well as some other guests and topics throughout the year. Shifting our focus over to the grain markets now, this week we are joined by Darin Fessler from Lakefront Futures and Options. Hey, Darin, thanks for coming back to Market Journal.
Thanks so much for having me.
Well, let's talk about the news of the day. You and I are recording this conversation on Tuesday. I want to make that emphasis as early this afternoon, we've got some news coming out, Darin, that a Russian missile strike crossed into Poland here. Not a lot in the U.S., at least. They're not confirming a lot here. But what could that mean, and what kind of impact could that have on the grain complex?
Well, it definitely had when that news broke, or at least the headline broke, I mean, everything was, you had equities come off and you had grain spike higher. And so with the idea that the headline had said, you know, this bomb maybe attacked a grain facility in Poland, that obviously put a little bit things on edge. Now that putting on edge, grain markets, corn, wheat had been really beat up, but it put a little spark under the beans as well. So again, that risk off on what we had seen over the last week on commodities, now it's risk on again. So we got to watch these headlines very carefully. We don't know all the details just yet, but definitely gave a little bit of excitement here this afternoon for the grains.
Shortly after that happened, you tweeted something out about risk is equal. The risk in the headlines is equaling some opportunities. Tell me more about what you mean there.
Yeah, I think more in particular, that message was for corn. Because if you look at the corn structure, there's not a whole lot of carry between December and March and May, and there's even May is at an inverse to, or May, I should say, March is at an inverse to May contract. So the market's not really paying you at all, really, to hold bushels past March. And you look at the strong basis levels around the country, the market's saying we want those bushels. And we want them now. We don't want them in July. We want them now. And so you look at the export structure as well in corn, and you got to really start thinking, okay, what is my goal here? What am I trying to accomplish by holding my physical bushels? Do I believe the futures are undervalued here? Do I believe the basis is going to strengthen more? Because right now, if you hold corn from March, let's say, to July, you're already losing 5 cents by doing that. So is the board or the basis going to increase more than 5 cents? Or with the higher interest rate environment, is that opportunity cost worth my time holding it out to next summer? I think it's a pendulum that guys are going to have to be really questioning. To me, I've been in a camp of continuing. If you get these rallies in corn and beans, even for that matter, is to scale in and continue to reward what the market gives you at the moment. We can always re-own that, have other strategies on paper.
Yeah, Darin, you talk about re-owning that and some of those other strategies out there, but I'm sure it boils down to FOMO, the fear of missing out, and the producer out there wanted to hang on to that in storage for perhaps trying to see some better prices. When you look at the corn and soybean side of things, do you see a potential for higher prices as we continue through the end of 2022 and early 2023?
I think you could see higher prices. Again, today's announcement or today's headline risk is obviously going to be a backdrop on that. Now, again, I think corn has been beat up here. I think wheat has been beat up here. I think wheat relative to corn is really beat up. Again, I think if we do rally back towards this $6.80 to the $7, whether that be on the Dece or whether that be on the March, I think those are opportunities for producers to again scale in here. Given the poor exports, if things are on the same path that they're on right now, from now until February, March, we're already going to be playing catch up. We're playing catch up right now. So the question that I have for the market is, if exports remain weak, and let's assume they will, what is there to get the corn to 750 even? Or maintain these levels. Now, granted, the tight stocks use ratio, the balance sheets are tight on both the corn and beans. That's going to keep things supportive. Okay. The other question, or the other part of that equation, how does South America pan out? How South America pan out is simply if they have a good crop, can corn maintain strength if beans do sell off? Okay, the bean strength has been driven by soy oil, the veggie oil, palm oil markets of the world. So the question and the pendulum is Brazil. It all comes down to Brazil. Even if Brazil has some weather issues, those weather issues I think are going to have to be worse than they were last year, simply because Brazil is going to have sheer acreage increases year over year. So they don't have to have a record crop from a yield. They just have the acres, and so that puts the corn market, the bean market, in an uphill battle. Not saying we can't get higher levels, but again, at the very moment here, rallies should be rewarded here. But again, basis will probably be strong in the Western Corn Belt for now.
Darin, want to include a viewer question we got in this week. Here's what the question, how it reads: what would a recession do to the grain markets? Your thoughts there?
Yeah, I've been very vocal on Twitter about this. I already think we are in a recession. But again, if you look at the CPI data, the inflationary data had come in just last week. So if we start to see this continuation of declining inflationary data, if that's what the Fed is going after the CPI number, the PPI numbers, if they start to see that come down, obviously that puts a backdrop of the Fed increasing rates on the back burner. It shifts money. I think it's all money flow at that point. It shifts money from commodities, which have been an inflationary type of run, towards stuff like equities, the stock market. That's what you had seen over the last week. But if you look at some of the job layoffs that are coming in the economy, well, that really doesn't bode well for stocks. And we all know inflation is probably a lot higher than what the official headline inflationary CPI number is. So again, I still think that there is still inflationary pressure that's going to keep commodities as a whole elevated for the time being. But there's that risk, though. If you look at a lot of these commodities that have been driven higher by inflation, they have a hard time sustaining rallies, crude oil being one of them. Again, we look at diesel supply, it's a 25-day supply. That's bullish. But again, it's the deflationary risk that I have that the longer term, maybe over the next 6 to 9 months, that I'm concerned with when it comes to commodities as a whole.
All right, Darin, as we wrap up, just a few seconds here. Any particular advice you want to leave our viewers with today?
I think you really got to look at where your storage is, look at what your goals are for the corn market. Again, the market's not paying you to hold it. You're getting strong basis right now. Do you reward it now, or what potentially do you see going out forward? Again, basis in parts of the Western Corn Belt, especially the western parts, southwestern parts of Nebraska, are going to remain very, very strong, in my opinion.
Thanks to Darin for his time this week. Well, we always enjoy asking our guests questions from you, our viewer. So if you have a question you'd like me to ask one of our future brokers or guests, be sure to email us and I'll pass your question along. Would you believe me if I told you that you could use nearly 90% less herbicide and still have the same effect as traditional broadcast spraying? Well, Green Eye Technology is using AI precision spraying, and they recently tested their system out with the University of Nebraska researchers. Their precision spraying tech turns every sprayer into a smart machine with seamless integration, allowing the machine to detect weeds and spray them precisely through individually controlled nozzles, all while traveling 15 miles per hour through a field. You can read about this technology in the November issue of the Nebraska Farmer. Well, it is once again time for weather with Nebraska Extension Ag climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, I asked you last week about snow, and that's exactly what we saw here in eastern Nebraska. How are things looking, though, as we turn to the week ahead, which includes Thanksgiving?
Well, Bryce, we did see a little bit of light snowfall across eastern Nebraska with that cold air and the successive waves that were pushing that cold air into the state. Accumulations were fairly light. I think the greatest I've seen was 2.5 inches in portions of southeast Nebraska, but for most locations, a trace to a half inch was probably on the higher end of the totals for most locations in eastern Nebraska. Western Nebraska, nothing in the way of any significant moisture, so we're going to wait another week for some potential precipitation, unfortunately. More importantly, this cold air that has arrived is going to finally scour out as it moves toward the east. That's going to create a pretty significant lake effect event for the Great Lakes region, particularly upper Michigan, and of course eastern New York, or western New York, particularly downstream of Lake Ontario and Lake Erie, where 2 to 5 foot of snowfall accumulated for the entire event is expected. For us, the models have changed dramatically over the last couple of days, and so instead of seeing several short waves moving to the north of us during the holiday weekend and keeping us fairly warm and dry, we're looking at a more potent storm system potentially developing and moving into the southern plains, and from there, if it moves far enough northward, it will impact Nebraska. I don't have a lot of confidence in this forecast, but I just want to let you know to pay attention to the weather, because these dramatic changes over the last couple of days makes for a very uncertain forecast. So as we look at the upper air model, we have it up, that big trough responsible for our cold air starting to shift toward the east. The coolest conditions today will be in the northeast Nebraska, where we were looking at the 28 to 32 degree mark, and in the southeast, probably the mid-30s, and as you get into southwestern Nebraska, probably the low 40s. As we go into tomorrow, of course, the wave moves a little farther toward the east coast. That allows a little bit warmer weather to come into our region as we get rid of that cold air. So bump up our temperatures about 5 degrees over today, and we should hit the mark. We do have a piece of energy moving through the southern stream. Right now, that's not expected to impact Nebraska. As we go into Monday, the system will move across Texas. An even weaker system with nothing in the way of any moisture to work with will move across the Dakotas, just giving a little bit of flurry activity. Once again, we're going to bump our temperatures up another 5 degrees or so. So we'll be looking at mid-40s to upper 40s southwest, and we'll be pushing the upper 30s to the low 40s across the northeast. Now, as we get into the day on Tuesday, this little piece of energy across the southern plains moves into the Ohio River Valley, and then we turn our attention to a big trough across the Pacific Northwest that's expected to rapidly move into the southern plains. So for us, kind of in a southwest zonal flow, temperatures will again be fairly nice. We should see 40s statewide with potentially lower 50s possible across extreme southwestern Nebraska. Okay, the day before Thanksgiving, this trough now makes it into the lower Great Basin, and then it will rapidly move toward the east-northeast. So we're going to see an increase in cloud cover, but we still should see temperatures primarily in the 40s statewide. As we get into Thanksgiving Day, we'll see that upper air low eject out into the southern plains. Surface moisture will bring that Gulf moisture up east of the low pressure system and then wrap it around. So potentially we will see some accumulating snowfall across the state, and if this moves more northeast, then it'll be much more significant accumulations. As we get past Thanksgiving Day, we start to see the trough moving into the central eastern Corn Belt. We see ridging starting to develop across the western United States and pushing into our region, so we will cool down a little bit. We don't have the big polar outbreak coming in, but we will definitely start to see a warming trend as we go into the very final days of November and into December. Well above normal temperatures, depicted by the 2 to 4 week forecast, takes us from Thanksgiving to basically the first 12 days of December, above normal temperatures for our region, and with that region placed below normal precipitation.
Thank you for that update, Al. Finally today, you may recall a recent discussion we had with Extension educator Jon Hay about some of the intricacies involved with adding solar power to your farm, home, or business. For those who have been considering options for solar power, Jon is putting together a series of workshops to help potential solar investors get the biggest bang for their buck. Market Journal's Bill Dodd has the story.
As input costs continue to rise, some ag producers are trying several options to offset those expenses. Electricity is one cost that can be a challenge to lower. That's one reason solar power is beginning to become a more appealing energy alternative for some producers. However, there are several things producers should keep in mind before jumping into the purchase of a new solar energy system for their home, business, or farm. That's why Nebraska Extension is presenting a workshop series around the state for those who have interest in this type of renewable energy.
Well, you know, there's a lot of people that are very interested in solar at their farms and businesses, and for a number of reasons. Some of that could be just a reduction in their cost, potentially. It also could be some marketing, where they're trying to market their farm as green. And also just a desire to be green and to generate some of your own electricity. So with those different reasons that people want them, what I'm trying to help them do is do that good economic analysis to determine what is going to be the payback and the economic return before they build it, understand how the policies within their region impact their system, and then that helps a little bit with system design, because systems of a certain size are treated one way within policy, and over that size are a little different. So there's a lot of variability there, and so we're really trying to help them work through that and make those decisions with good data.
One of the biggest takeaways attendees will get from this event is going to be information that will help them make the best economic analysis for potential solar systems. By getting into the variable economics of solar power around the state, event participants will gain a better understanding of what will and won't work for their particular goals in the areas they reside.
And there is some debate going on within policy within the state on how the utilities deal with these customers. And also there's a lot of variability across the state with how the utilities have written policy and how they've interpreted some of the state law. And that really lends to a lot of diversity in the payback and the economics of these systems, and why it's really important to look at the economics in your unique situation and not just declare that these are a certain good deal or bad deal in different parts of the state. Really, one of our big highlights is going to be how to look at their individual rate schedules and how their individual utilities interpret policy so that we can do a better job of economic analysis. And so really, we're going to focus on economic analysis, but when we focus on economic analysis, we also can get into how these systems work, how we design these systems, where we put them on a roof or on the ground, and some of the ways that we optimize that system for a particular location. And so we're going to get into all that optimization and some of the design characteristics, but really in the framework of economic analysis.
There will be several opportunities available for people to attend one of these events around the state. The workshops will kick off on December 1st in Lincoln, followed by a December 5th stop in Tacoma. The following day, December 6th, there will be an event in Auburn. From there, residents in western Nebraska will have an opportunity to attend one of these workshops, where events will be held in Chadron on December 7th, Ogallala on December 8th, Concord December 13th, and ending in Central City on December 15th. Reporting for Market Journal, I'm Bill Dodd.
Thank you for that information, Bill. There is a $10 fee associated with registration of this event. You're also encouraged to register at least one day before that desired event you'd like to attend. Jon will be the host and speaker of the events. He has more than 10 years of experience now conducting solar economic analysis. Well, that is all the time we have for this week's show. Remember, if you missed a story, you can download the Market Journal mobile app and follow the team on social media to join in on the conversation. We hope to see you back here next time. Until then, I'm Bryce Tuskett, wishing you a safe and productive week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Partial funding provided by the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.